I'm Kayla Meadows, your Realtor with Keller Williams. Welcome to Mortgage Monday, where the first Monday of every month we'll talk about different financing options for you. Today I'm here with Byrom from Loan Depot. I'm going to let him introduce himself.
Hey everybody, my name is Byrom with Loan Depot here in Tallahassee. I've been in the mortgage business locally here in Tallahassee for about 20 years. I do have to give my NMLS number, that's 276811. I'm currently the State of Florida Manager of Renovation Lending for Loan Depot, which is a specialty of mine, but I think we're going to talk about some other things today.
Yeah, so I was just talking with Ron about some clients I had. They were actually flood victims in Fort Myers, Florida. Their condo got completely flooded. They had to basically gut it and live in it for a couple weeks with no walls. They ended up using some insurance money and just paying cash, but then Ron started talking about some programs that he is able to offer that would help finance something like that.
Yep. And I had asked Kayla when I saw the story, because it was a really cool story online, hey, did these people happen to use a disaster loan? And found out that they used cash, which was a great situation for them. But FHA 203H is the actual program, a disaster loan. It is a great opportunity for people in their exact situation.
Yeah, which is amazing. So basically, if you have had any kind of disaster, any damage to your home, and you're in that situation, there's actually an option for you, a first-time home buyers, right, option. So it had to be a primary residence.
It does have to be a primary residence, but it's not a first-time home buyers thing. It's for anyone who has lost their housing, specifically in a presidentially declared disaster area. So you can actually look that up on the FEMA website. You can go to FEMA.gov and look it up, and it will show you all around the country where different disasters have happened. And here in Florida, we see the hurricanes. We had quite a few people move to our area after Michael, and now we've seen people come in from Southwest Florida, and a lot of people get displaced, but it could even be somebody moving from California because of a fire in a disaster area, or a tornado somewhere in the country. They do have to show proof that they lost their housing. They then become eligible for 100% financing with this program, which is very cool. We have to show evidence that they lost their housing, but one thing that's really neat is it's not just homeowners that lost their house. It can be renters, someone who wasn't even able to own a home, had been renting, were displaced, maybe wasn't in position to buy a home, and in a backwards way, this becomes a stroke of fortune for them, because now they're eligible for 100% financing.
So that's huge. So I could have been a renter, my home got destroyed. Unfortunately, I probably have less money than I even had before, but then there might be some help out there for me to actually be in a better place eventually than I was before.
Yep, and you still get all the other benefits that come with an FHA loan. You can ask for up to 6% in seller concessions, because even though there's no down payment, a buyer still has to worry about closing costs, but a realtor can negotiate to get those covered. So somebody can get into a home literally for just about nothing out of pocket by leveraging this program and working with a good realtor. So it's a fantastic opportunity. And really, it's a matter of asking questions. You know, as a realtor, you get people frequently moving into the area, and you ask those questions. What brought you here? Oh, I know that's the area where the hurricane happened, or maybe somebody's moving from a completely different area, but if you ask enough probing questions, maybe you find out that they had a tragedy, they lost their housing through something that was connected to a presidentially declared disaster, and boom, suddenly they're eligible for this program.
So besides obviously the disaster part, providing proof of that, what are some other qualifications that buyers might need?
Sure. Well, you would need a 580 credit score. That's a HUD requirement through FHA. And something that's pretty cool is if people have run into problems with their credit that are related to what happened to them through the disaster, there's more leniency there. So let's say that they missed a couple of mortgage payments, or they missed a couple car payments, something that was a result. They need to have clean credit previous to the event. But then if we see that they've run into some problems that were caused by the disaster and what it has done to them, there's leniency that's given to those items that normally wouldn't be there. So it's a fantastic program all around. And if they have an existing mortgage, that mortgage is not wiped away. We have to show that they're working with that mortgage company. The insurance proceeds will go towards settling up that mortgage, but they can still move forward and leverage this program even in that situation.
Wow, that is so helpful. That's amazing. Okay, so what does the process kind of look like there, as far as like once, we applied, we are approved, pre-approved, then is it different than a normal home process?
A little bit, because we do have to show proof of certain things. So we have to show proof of where they lived before, something as simple as a driver's license. This is where I lived. Then we need proof that that home was destroyed. That could be an insurance claim, or if you're a renter, maybe a landlord letter, maybe actual time-stamped photographs. Lots of ways to prove that you lost the home, but that is probably the biggest extra step is proof that you qualify.
Okay.
This can be used even with my specialty being renovation. This can be used even with the FHA 203K. Now, the biggest advantage there is some of the leniency on the credit stuff, because there's a little difference with the 203K. It's not 100% financing. You do still have to come up with your down payment if you're leveraging the 203K. But there is a 203K, 203H merger.
So what if, say you were in Fort Myers, your home got flooded, so that's a disaster, and you wanted to renovate your own home, would that be an option?
So if you wanted to renovate your existing house that had been through the disaster, and I've had conversations like with one of our managers with Loan Depot that's down in that territory about that very topic and how renovation mortgages can be leveraged. So a lot of times the insurance is not going to be sufficient to do all the repairs to the home. If somebody has a sufficient equity position and we can use a renovation mortgage to help them salvage that home in combination with the insurance money that's coming in, that is actually a very good tool. That wouldn't be for somebody moving to our area, but heaven forbid, what if we had a disaster here in our area? Then that the 203H actually might come into play for a lot of people, but also just some regular tools like a renovation mortgage could come into play as well.
Right, but you're licensed in all of Florida and then a few other states too as well.
I am. Right now I'm licensed in Florida, Georgia, and Alabama. And the cool thing is, like I mentioned before, the person could be displaced by a disaster anywhere. It doesn't have to be a person that was impacted by a disaster in Florida for us to do a loan here in Florida. It could be someone that was displaced by a presidentially declared disaster anywhere in the nation that just happens to have chosen to move to our area.
Awesome. Well, I think that was super helpful. If y'all have any other questions, you can post them down in the comments. The 203H financing is just one awesome thing that Ron does. He's been in it how many years?
About 20 years now. 20
years. And I'm telling you, if anyone can make it happen, it's Ron. So reach out to us if you have any questions. Have a great day.
Thank you. Appreciate you, Kayla.